River is an institution dedicated to providing financial products and services to harness the transformative possibilities of Bitcoin. Alex brings his deep expertise in software engineering, information security, and Bitcoin to River, where he oversees investor relations, corporate strategy, and engineering. Alex holds a master's in computer science from Stanford, where he actually helped teach the first Bitcoin class. How cool. So everyone, welcome Alex.
Hi, everybody. I'm Alex Leishman, the founder of River. At River, we make it very easy for individuals and businesses in the United States to buy, use, and secure Bitcoin. Today, I'm excited to talk about some Bitcoin adoption trends that we've seen over the last year and through Bitcoin's life. In this presentation, I'm going to talk about some of the adoption trends we're seeing of Bitcoin as an asset, how Bitcoin is being used in corporate treasuries and its impact on business payments, and some of the technical trends that we're seeing in the Bitcoin network. So, Bitcoin is about 15 years old. In that 15 years, it's gone from what is effectively a science experiment, a cypherpunk science experiment on the internet, to one of the most valuable assets in the world today. When ranked among precious metals and public equities, Bitcoin is in the top 10, although today it might be ranked a few lower given the Bitcoin price. But nonetheless, it's come a long way in 15 years. And why is that? Well, the core reason is that Bitcoin is the first absolutely scarce asset in human history. There will only ever be 21 million Bitcoin. And Bitcoin's supply, its monetary policy, you could say, is defined in 6 lines of code in the Bitcoin core code base. And those 6 lines are right here. And for those of you who aren't programmers, what this code says is, in a very elegant way, when the Bitcoin network launches 15 years ago, every new Bitcoin block will reward 50 new Bitcoin to the person who mined it. And then, every 210,000 blocks, or about every 4 years, that amount of new Bitcoin rewarded will be cut in half. It just takes a very few lines of code to actually define this. And if you plot that out on a chart, this is what it looks like. The gold line is the amount of Bitcoin in circulation over time. We're at 2024, and at this point, most Bitcoin has been mined. 19.6 million out of 21 million Bitcoin has been mined to date, meaning there's only about 1.4 million Bitcoin left to mine. And what that means in inflation rate terms is in the red line. So the inflation rate is asymptotically going to 0. And this is the core of why more and more people have been attracted to Bitcoin. It's the first asset in human history that behaves like this. So who owns this Bitcoin? Who are the actors that have accumulated Bitcoin over the years, and what does that look like today? So we've done some research here and put together this graphic. And I'll just highlight a few important things. About 12 million Bitcoin, the largest amount of Bitcoin in this graphic, is owned by individuals. People like me and you, people who have bought Bitcoin since the very early days, people who just bought Bitcoin for the first time yesterday. Some of these people have Bitcoin in their own self-custody. Some of these people, actually most of them, are holding it on some exchange like River, like Coinbase. And this is really the largest segment of owners of Bitcoin. The second largest chunk of Bitcoin has actually been lost forever. That might come as a surprise to some of you, but we estimate that about 3.7 million Bitcoin is lost forever. And the reason this is the case is that in the early days, Bitcoin was not very valuable. It was kind of an experiment, and a lot of people played around with it and didn't back up their wallets, got a new laptop, lost their old one, and the Bitcoin that was in those wallets is gone forever. So the amount of actual Bitcoin that is available long term is substantially less than 21 million Bitcoin. And then we have businesses, funds and ETFs, and governments, these large institutions, these blue and black bars. These bars have gone from virtually nothing to where they are today and they are continuing to grow. And that's a very fascinating trend that I'll dig into a bit more here. And then lastly, I just wanted to point out miners. Miners own, we estimate, about 700,000 Bitcoin. And the reason miners don't own more Bitcoin, since miners are the ones who are creating the Bitcoin, is that they actually have to often sell that Bitcoin to pay for their operating expenses. And they end up selling to individuals and businesses. But since miners are the most upstream player in the Bitcoin space, let's talk about them first. Those are the people that create the new Bitcoin. So what have we seen in mining trends over the years? So this is a bar chart breaking down the types of miners and the amount of Bitcoin that these types of miners have ever mined over the whole history of the Bitcoin network. And something obviously stands out. The vast majority of Bitcoin in the last 15 years has been mined by solo miners, unknown players, hobbyists, people just running the mining software on their laptop. Because in the very early days, when the block reward was the highest, and it was the easiest to mine Bitcoin, because not that many people were doing it. So lots of people were coming in and playing around. And then as people clued into the scarcity of this asset and it started getting more and more valuable, mining became increasingly competitive. People started pooling their hash rate together. And mining became a much more institutionalized sort of business. The mining operations became big institutional data centers. And over time, these pools started mining the Bitcoin. Pools like F2 Pool, Ant Pool, Foundry. Now, that's not very visible in this chart because this chart is Bitcoin denominated. But if we actually switch this chart around and plot the dollar value of Bitcoin ever mined, it shows a very different trend. The biggest miners today have mined the largest dollar value of Bitcoin over the years. The biggest players today in the Bitcoin mining space are Ant Pool, F2 Pool, Foundry, Via BTC, names that some of you may recognize. They're getting increasingly large. And these players have mined tens of billions of dollars of Bitcoin. The pools themselves are the ones that are coordinating the hash rate, and then the actual mining operations pointing their hash rate at these pools are also becoming increasingly institutionalized. In fact, the largest mining operations in the world are now public companies in the United States. So we've seen a lot of institutionalization in mining. That's really the takeaway, and that trend is not slowing down. So miners deeply understand Bitcoin's scarcity. They drive the creation of new Bitcoin through mining blocks. And if we look at the Bitcoin price over time, we see some interesting trends. The biggest one is, well, it keeps going up. This is a log scale chart. But if you plot the Bitcoin halvings, and by the way, we just had the 4th halving in Bitcoin's history a few weeks ago, we see some interesting trends. Every halving is typically followed by, with a bit of a lag, a substantial price increase for Bitcoin. Now, it's to be seen if this is going to happen again this time around. We don't know for sure. We've already seen a pretty big price uptick this year going into the halving in the expectation of the reduced supply coming onto the market, and for some other reasons. But Bitcoin price is really the coordination mechanism for the actors in the Bitcoin network, and it's an important thing to pay attention to. So in the first part of this year, we've seen a pretty big price uptick, as I'm sure you've noticed. What's been driving that? Well, the halving is one, but I think it's a little more nuanced than that. Retail is not really driving the recent rally in the Bitcoin price. If you plot the Google search trends from over the last few years for Bitcoin, what you see is that consumer interest in Bitcoin is nowhere near its all-time highs during the last bull market in 2021 and 2022. Bitcoin hit its all-time price highs, and Bitcoin search interest on Google didn't really get close to where it used to be. So what's going on here? What is driving this price increase? Well, we think that one big factor here is institutions. I'm sure you all are familiar with who this is. Michael was one of the first big business leaders to point to Bitcoin as an asset and say, this is something that we should pay attention to, and here's why. And he's done an incredible job at articulating the why for people running businesses and for institutions. However, in 2020, when MicroStrategy first started buying Bitcoin, which was the start of probably the largest dollar cost average of Bitcoin in history, not everyone was convinced overnight. It took years and years for this trend to materialize and for more and more businesses to understand that this made sense for them. Because as this bet has paid off for MicroStrategy, it gets more and more attention from other people running businesses. And the proof is in the pudding here. Between May of last year and this month, there's been a 43% increase in the amount of Bitcoin held by public companies. For private companies, it's a little bit more complicated because we don't know the financial situations of private companies by definition. But we do know a floor. From self-reported Bitcoin holdings of private companies, the total ownership of Bitcoin for private companies has increased 12%. But realistically, that's an absolute floor. It's probably a multiple of that. And we've seen this at River. At River, we serve over 1,000 business clients. These range from the smallest companies, like a hot dog stand, to large family offices. And although we have high variance in the size of business clients we serve, we've seen some interesting trends in just the averages of the balances held with us. In just the last year alone, the average Bitcoin balance held by businesses at River has increased 60%. It's gone from about 2.5 Bitcoin to an average of 4 Bitcoin. And the dollar value has increased even more than that because of the price increase. So this trend is real. More and more businesses are not only buying Bitcoin, but they're buying more of it. And it's not only businesses. Governments have started paying attention as well. Nayib Bukele, the president of El Salvador, noticed around the same time MicroStrategy started buying that maybe countries should start paying attention to this. Initially, he got a lot of pushback. People were laughing at him. But they're not laughing anymore. This has paid off pretty well for El Salvador. Not only financially are they pretty cleanly in the money, but this has also helped turn around El Salvador's brand. I think before El Salvador started buying Bitcoin, most people knew of El Salvador, who knew what that country was, had heard about it for the wrong reasons, for crime, for gang violence, et cetera. And now when they hear about El Salvador, they think about Bitcoin or sort of a forward-thinking leader. El Salvador got a lot of pushback from the United States for doing this as well. But I think the United States is now realizing like we have our own financial problems. And our own currency has some long-term rocks, some potential rockiness on the horizon. Both political parties don't agree on much, but what they do agree on is spending a lot of money. And our national debt is now rising by about $1 trillion every 100 days. And these numbers are so big, they don't really feel like they mean anything at this point. But I think for those who are students of economic history typically know sort of where this leads and why Bitcoin is something worth paying attention to. So it's not only operating companies buying Bitcoin. A big new door opened up this year. The first Bitcoin ETFs in the United States were approved and launched in February. This was the final door to be opened for institutional capital. A lot of institutional capital needs securitized wrappers around the assets that they buy. It fits in very well to the financial system. They can borrow against it. Their whole financial structure is set up to use these kind of assets. And now that Bitcoin is available in an ETF, a lot more institutional capital is able to accumulate this asset. And we've seen this already. Within a few months of launch, the Bitcoin ETFs have accumulated almost 1 million Bitcoin to date. And if we extrapolate this trend, which may or may not be a valid thing to do, we'll see how things keep going here. But by next February, Bitcoin ETFs might own about 7 to 8% of the total Bitcoin supply. And you'll hear a lot more from the ETF players tomorrow. May 15th is a big day. On May 15th, we'll actually see who some of the biggest owners of these Bitcoin ETFs are. People who own over $100 million or institutions who own over $100 million of these ETFs need to report to the SEC. And that will be some very interesting information to know who's been buying these Bitcoin ETFs in large quantities. I've heard there will be some surprises. So definitely something to pay attention to is these blue bars, businesses and funds and ETFs. We think that the trend will continue, that these entities will keep buying Bitcoin from the individual holders. And this will be a big factor in the Bitcoin market over the year to come. So let's talk a little bit more about what it means to buy Bitcoin in a company. Like if you're running a company, who's doing this and why, and what are the challenges? So in the early days of Bitcoin, you had people starting companies who were aficionados of Bitcoin, and it was typically the company itself was branded around Bitcoin. Maybe they were selling socks online for Bitcoin, or they were selling hardware. They were building hardware wallets for Bitcoin holders to self-custody their Bitcoin, and so they sold their hardware wallets for Bitcoin. Everything was somewhat niche and very focused. The business models were very focused on Bitcoin, and Bitcoin was more of a payments tool back then. Everyone was kind of like, I want to accept Bitcoin payments online, and that was the big driving force for a lot of Bitcoin adoption back then. But it was a very niche thing. And those were like the first companies that started actually holding and using Bitcoin. But it's hard to build these new companies, and there's a very small market. So that wasn't going to be sort of what led to Bitcoin's widespread adoption. And so now we're in a phase where the companies adopting Bitcoin are just normal operating companies. And we're finally getting over this hump of sort of the challenges and the reasons that they weren't adopting Bitcoin before. It was difficult to prioritize Bitcoin on their roadmap, and it was hard to update their legacy systems. These challenges are increasingly being solved. And companies like MicroStrategy have helped set the framework and showed business leaders how they can do this in a relatively straightforward and easy way. Additionally, a big trend that we're seeing is the quote-unquote normal companies buying Bitcoin are typically operated by somebody who personally believes in Bitcoin. And so as more individuals start believing in Bitcoin and buying Bitcoin for themselves, their next logical step is to buy Bitcoin for their businesses. And so because they're a business leader, they're able to push through some of these challenges that come with adopting Bitcoin for a company. And they're almost always adopting Bitcoin as a treasury asset. Sometimes they want to use Bitcoin for payments, but we've really seen that the product market fit for Bitcoin for most business clients has been as a treasury asset. And the interest in using it as a payments, as a mean of online payments is a much smaller segment of the market. And then the biggest addressable market, the vast majority of companies still don't have Bitcoin today. And there's a lot of reasons for that, but a big one is there's a lot of company politics that block putting Bitcoin in your balance sheet. And so if your company today is not run by sort of an orange-pilled, you could call it founder or dictator, it can be quite tricky to get anything to happen with Bitcoin. And that's the next step. That's the next wave of companies that will inevitably adopt Bitcoin as it becomes more normalized, as it becomes easier, and as it becomes less of a sort of political fight at a company because it becomes the obvious thing to do with your treasury. Bitcoin can be a bit of a cheat code for your treasury, and this is what a lot of businesses are realizing, that buying Bitcoin for your corporate treasury can unlock some real business benefits, and we're seeing a lot of success stories, and MicroStrategy isn't the only one. There's a soccer club in England, in Bedford, England, that has been buying Bitcoin for years now, and that has led to a substantial increase in the value of their treasury. They've used that money to buy better players. And for those of you who know the British soccer system, there's all these tiers of leagues. They started in the bottom league, and they've since moved up a number of leagues because they had more resources to buy better players, have better equipment, have better trainers, et cetera. And their goal is to eventually get to the top league, the Premier League. And so recently, the Winklevoss twins actually just invested further in this Bitcoin soccer team to help accelerate this trajectory. And at River, we walk the walk. Over half of our own corporate treasury is in Bitcoin. And this has helped us in a number of ways. It's substantially grown the value of our treasury. We have more resources as a company. It's also diversified our treasury away from cash, and it helps insulate us from risks in the traditional banking system, which you might not think about day in and day out, but sometimes it does come in handy. There were about 5 banks that failed last year. So having a 24/7 liquid asset on your balance sheet that's completely decoupled from those risks can be compelling. And long term, because we obviously believe in its long-term success and growth, this will just end up creating long-term value for shareholders, as it has at MicroStrategy. So an interesting trend we've seen is that the old way for businesses to adopt Bitcoin, as I mentioned, was to you run an existing business or you sell something online and then you go, let me accept Bitcoin payments. That was kind of like the old early Bitcoin way of getting into Bitcoin as a business. We're seeing that actually getting flipped on its head. And businesses today are saying, well, Bitcoin for payments, I mean, that might be interesting. But actually what I'm really interested in is buying Bitcoin for my treasury. And then they start wondering, okay, should we do more with this thing? We have this Bitcoin in our treasury. Should we be using this for payments? Or should we be accepting Bitcoin payments since we already have it on our treasury? Why not accept Bitcoin payments for goods or services? And while there isn't a ton of activity here yet, there's a pretty big opportunity. If you break payments down, if you break down global cross-border payments by category, pretty much everything is a rounding error in comparison to B2B payments. So B2B payments is basically all international payments. Is kind of one way to think about it. So you could imagine a future where if most companies in the world have Bitcoin on their treasury, it becomes sort of a interesting thing to ask, well, will they just start making international payments in Bitcoin, given that international wires can be pretty hairy sometimes? So this is just an interesting trend I think worth paying attention to. Another example of how this paradigm of treasury-first Bitcoin versus payments-first Bitcoin is really what is being adopted right now is what Square just rolled out a few days ago. So Square made it very easy. They launched this last week. They made it very easy for merchants who are Square merchants who accept, coffee shop accepts credit card payments with a Square terminal to automatically convert some of their revenues into Bitcoin. And what's interesting is what they didn't ship was the ability to accept Bitcoin payments. They shipped the ability to convert their dollar payments into Bitcoin. And I think that actually says a lot about where companies and business leaders are thinking right now as it relates to Bitcoin. It's really all about the balance sheet at the moment. Now, Bitcoin payments has been seeing a lot of advancements, though, in the technology that could make Bitcoin more and more suitable as this medium of exchange, as this payment technology. The Lightning Network, which last year's conference discussed a lot about. If you were here last year, we went very deep into the Lightning Network. But for those of you who aren't familiar with it, just to give you a high-level summary, the Bitcoin blockchain is kind of like the Federal Reserve. It's slow. It's for sending large amounts of money. The Lightning Network is like a decentralized version of Visa. It's for smaller and faster payments. And that's seen a lot of growth as well. In the 2 years between August 2021 and August 2023, we estimate that there was about a 1,200% increase in the number of monthly payments on the Lightning Network. We haven't yet run the data for this year, but we'll be launching another Lightning report, which we do annually at the end of this year as well, so stay tuned for that. But the number of small Bitcoin payments being used for various reasons, sometimes it's commerce, sometimes it's peer-to-peer, sometimes it's online gaming, it is seeing healthy growth but the value of those transactions are typically pretty small. The Bitcoin blockchain is capped at how many transactions it can process a day. And the gray chart here shows the average number of transactions per day of the Bitcoin blockchain. And the gold shows the transactions per day of the Lightning Network. And the Lightning Network transaction numbers, by the way, they're our own estimate. They're a conservative floor. The number is actually probably higher. So the Lightning Network is really unlocking more transactions that can happen in Bitcoin at all. And the jury's still out about how big this is going to be. It's pretty exciting to see the growth. But I think really sort of one observation that we've had is while commerce with Bitcoin is a really cool idea, people still mostly want to use dollars for that. And so something interesting happening is that the Lightning Network is going to become multi-asset. You're going to be able to transact dollars on the Lightning Network as well. So that's another trend worth paying attention to. And if you want to learn more about the Lightning Network or some of the trends we're seeing, we have a report. Just Google River Lightning Report, and it'll probably be the first result. You can download it really easily. So what's the end goal with sort of all of this work happening on Bitcoin technologically? Like, why are we doing this? What's the point? Well, really the end goal is that anyone who wants to, not everyone, but anyone who wants to, is able to move Bitcoin and take custody of it if they want, right? That's sort of an important feature of this asset to maintain its value. And so a lot of the work of scaling Bitcoin is to make that activity possible as the number of people who use Bitcoin increases. So there's all sorts of interesting work being done right now to unlock things like this in the future. And the cool thing about these is almost all of them require no changes to the Bitcoin protocol. There are all these layers built on top of Bitcoin so that you can experiment in a much less risky way off-chain, just like the Lightning Network, to figure out what else you can do with Bitcoin. And there's been a lot of progress in some of these ideas and developments. And so these are just some concepts and buzzwords you could say to pay attention to if you're interested in looking more into this. So how are these new projects doing this? What are they using? How does it not touch or change the Bitcoin blockchain? Well, when the Bitcoin blockchain has this programming language, it's very simple. It's called Bitcoin script. And while it's very simple, over the years, more and more people have realized there's more and more we can be doing with this thing that nobody had noticed before. And so that's really the big theme this year, is that there's been a lot of smart people paying more attention to this and realizing there's more that we can do with this Bitcoin script than we thought we could. And these explorations come down to how do we increase Bitcoin's scalability, utility, and privacy without making it more centralized over time. There's a Bitcoin script event happening in Austin right now. So if you want a list of like technical topics to Google, this is one. I'll publish the slides later so you guys can look it up. And changes to Bitcoin. Bitcoin is a very conservative project. Changes happen very slowly, and they should. One of the most recent changes to Bitcoin was called SegWit. And SegWit was shipped in 2017. It was a change to Bitcoin that made transactions less malleable. There were all these sort of like issues that Bitcoin transactions had if you wanted to use them for accounting and things like this. And SegWit addressed a lot of those issues. But it was actually only until this year that the usage of this change actually hit near 100%. And I say this is a good thing, actually. Bitcoin should move very slowly. And so it is sort of worth, this is just a property of the project worth understanding. And so 2024, to wrap it up, marks a new era in Bitcoin's existence. As an asset, institutional ownership of Bitcoin is now mainstream. That's really the takeaway. This year, I think, marks the first year where we can say with 100% certainty, institutional ownership of Bitcoin is normal. And the door is open. And the technology is also advancing. There's a lot of interest in Bitcoin as a technology, in Bitcoin script, and experimenting with future ways that we can use Bitcoin. The work on that needs to start now because it could take decades for any of this to even be realized. And so 2024, from both the economic perspective and both the technical perspective, is a foundational year for Bitcoin. And I'm really excited to see what happens next. That's it. Thank you.